Well, are your finances on shaky ground? As the year comes to a close, many of us reflect on money matters, and we wonder how we can take control of our finances. Well, financial advisor Tom Crow is back to help our viewers take control of their own financial future. Good morning, Tom.
Good morning. It's great to be here.
Great to have you. Happy holidays to you.
Happy holidays to you.
And what is really meant by investing? What does it really mean?
Well, it's a pretty big term, but basically it is putting current assets to work to achieve some future goal. Usually lumped in with savings, savings and investing, but really saving is even a form of investing, depending on what it is you want to do with the money and how much risk you want to take with it.
Sure, and I think that every single person wants to be a good saver, wants to be a good investor, but it's always a little easier said than done. So let's first start with who should invest.
Who should invest? Well, anybody that, again, has a future goal to be met. Probably one thing I never advise is trying to put money in the market and chasing some returns if you're trying to offset debt. I mean, the surest fire investment you can make, if you've got debt, that's a negative return for you. Paying off debt is a guaranteed return because you're just getting back to break even.
Right. It's like don't go to the casino and gamble to make back your money.
You can't ever count on getting that positive return to offset the negative. So if you've got debt, first thing you need to do is save and get out of debt.
So that's before you even invest.
Before you even think about investing, really.
So the people that should invest are the ones who are already at least at a zero balance, at least there.
Responsible use. You're not working every month just to make ends meet, just to pay your bills.
Okay, so then how much do we need to get started? I mean, is there a certain amount?
You can start anywhere. I mean, if you want to start with bank CDs, you probably have a $1,000 minimum.
Okay.
A lot of mutual funds have 500,000, 2,000, depending on where you go to buy them.
Okay.
You can buy individual stocks, you know, for $2 or $3 a piece plus a trading commission.
Yeah.
It kind of runs the whole gamut.
Well, just what you're saying right now shows that there's really a lot of options.
There's an awful lot.
I mean, where should I go? I mean, you're saying mutual funds, you're saying different, different ideas, but how everybody out there is going, well, I don't know which is best for me. So should I do it alone? Should I get help? I mean, what do you advise?
It's what makes you most comfortable.
Okay.
Again, I say, when people start investing in things you understand. And as you gain experience investing, then you're going to get to more and more sophisticated investments.
Okay.
If it's something that you don't have time or desire to take care of every day yourself, I don't ever advise just buying something and forgetting about it.
No.
You want to pay attention and keep track of things. If you don't want to do it yourself, then find somebody to work with you. And if it's a financial planner that's going to look at your insurance, your mortgage, all your long-term care insurance, your investments, and everything kind of as one picture, you can work with somebody like me who's just a fee-based advisor. I manage investment portfolios for clients.
Okay.
You got insurance folks that are selling insurance products and annuities, folks at the bank that are going to sell you CDs.
Sure.
So it's kind of anything. And again, it's what is your comfort level? How much risk can you take?
Well, and of course with the stock market, people that are really invested in it, they're watching it every day. It almost becomes an obsession for some people.
It can, and that's not healthy either.
No, so you want to find that balance, really, ultimately.
And you'll find somebody you're comfortable with. There may also be an area of expertise. If you've got large real estate holdings or oil and gas interest or something like that, you may find an advisor that has a specialty in that area.
That makes sense.
That could help you.
Well, and also a lot of people are working, and a lot of people have retirement plans. So how does a company retirement plan actually fit into all this as far as investments go? Usually
in a retirement plan, there's a couple of things about them. You can usually put more into them than you can a traditional IRA or a Roth. So it's nice if you do have the free income to stash away for future retirement savings. You can usually put more there. And then it depends on the plan itself as to what investment options are available to you. A lot of times they'll have families of mutual funds, funds of funds. You may be able to hire an advisor to manage that for you for an additional fee. Again, it depends on the plan and the kind of the amount of money the company's willing to spend on it in terms of what kind of services are offered to you.
Do you advise putting more money in when the company's matching? Because I know a lot of times if the company doesn't do a full match, people put in a little less. But once they get to that point in their term of their job of however long they've been there, sometimes they start to match. So would you advise putting in more when it gets to that point?
Always meet the match. If they're going to match 4%, then at least put 4% in. If you don't, you're just leaving money on the table. That's free money.
It is. It is.
Then it gets down to once you're above the match, then just do whatever you can afford, really. Again, you get the tax benefit of not being taxed on that income, and you can put more away for the future.
I didn't even think about that. You're right. I know a lot of people are very hesitant about putting their money in, and they're very hesitant about putting their money in the market. And so, as we get into the new year, do you have any little secrets or any sneak peeks you can offer to our viewers viewers that maybe just some inside information?
Yeah, who knows what the market's going to do. You know, my crystal ball is probably just about as foggy as anybody el's right now.
I don't want to get you arrested.
Europe, we've got, you know, North Korea just had this big turnover in leadership. We'll see what happens there. But you really
But anything to watch for? I mean, obviously you can't give us things that we don't know yet. It's all who knows.
Again, start with the basics. You know, get the debt taken care of, and then start simply. If you're a brand new investor, start simple. If you need somebody to work with, find somebody that you can get along with that meets your interest, that you think is going to serve you. And then as you gain experience, then increase your level of sophistication.
Okay, it makes great sense. And I know a lot of people will want to watch the videos that you offer on your website.
Yes.
Tell everybody where they can find you.
FocusOnTheFuture.tv. There's a stock market corner, and there are also segments with me as a guest talking more about kind of what we're doing, Investing 101, how to get started, where to go.
That's great, and it's so helpful and so useful, and really something very much worth taking a look at, because as we get into the new year, we all want to get on a better track.
Sure.
Thanks, Tom.
You're very welcome.
Happy holidays to you.
Happy holidays.
And have a very happy new year. And coming up next, we are taking a bite out of the golden apple and meeting two special teachers who are making a difference in the lives of our kids. Don't go away.